Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in for this edition of Macro Mondays, which is a little late for you guys. But for me, this is being recorded on Monday evening, September 22nd, 2025. In this edition of Macro Mondays, I'm going to talk about why silver now could be our best indicator to help us gauge when this move in precious metals is going to hit an interim peak, or what I think at this point is going to be an intermediate term peak. It's probably going to be a more significant peak that I was thinking about in recent weeks. And in recent weeks, when I was thinking about it, I did not consider silver. And this is important, guys, because major peaks in precious metals and also various interim or intermediate term peaks usually get some kind of blow off in silver or a mini burst at the end of a move where silver really shines. And days ago or weeks ago, I was thinking, okay, silver will probably stop in the low 42s at $42, $43 resistance. But no, it never occurred to me silver could run up to 49 or 50. Now silver's at 44 bucks, and it's looking like this move is going to continue. Gold still has measured upside targets of 37.50, 3900, 39.50. So it looks like this move is going to continue for a little while longer, and silver at 50 bucks. That could be a magnet, not also for silver, but for the very end of this move. Now, let me discuss why with some charts. Okay, so let's understand the very big picture in silver. Bear with me, I know you've seen this before, but this is for those who have not seen this before. This is a monthly chart of silver going back 160 years. Well, this is more quarterly data here, but more recently, this is monthly data. And we're coming up on this 45-year-long base, major resistance at 50 bucks. So $50 is clearly a point where we could expect the market to take a rest. Doesn't mean it's going to be exactly 50. It might be 49, it could be 53, 54, but I would be shocked if we kept moving to 60 or 70 before a significant correction and at least pause takes hold. Now, and here's another thing which I've been sharing this, but I should have given this more weight in recent weeks and days. And that is silver in real terms. So this is silver against the 60-40 here. This is silver against the stock market. And in particular, in the last couple weeks, we have seen a breakout here where silver against the stock market has broken out of a 4-year-long base. And so this means that money is moving out of the stock market, conventional stocks, and into silver. And so this breakout, so far, it appears to be sustaining. And because money is rotating out of one big area and going into silver, that's giving it more fuel to be able to push higher and higher in the short term, at least. And so here's silver against the 60-40. Wasn't the cleanest breakout here, but it did break out a month or two ago of this 5-year-long base against the 60-40. And now this is going to continue higher and basically test this 11-year-long base against the 60-40. So long story short, capital is moving out of other areas and into silver. So that's why in the very short term, this move is going to continue. Okay, now here's my favorite analog chart for silver. Silver's performance after gold breaks out to a new all-time high. So we start this at the end of February last year, 2024, and we have various market moves here. We did not include the 78 to 80 move because that was way off the chart, but that is included in one of the averages. And so we continue these averages after their peak. And it's interesting how we can see the 2009 move and these two averages. Look, they coalesce here with a peak here at 62 bucks. That's it at the end of January. So that's what? That's 4 months. Gosh, it's getting late in the year. So you have that. And then at the same time, we're following this 1972 move really closely. And again, I love this beautiful cup and handle. So we're at 44 now. Maybe it'll continue up here and then it'll stop at 50 and consolidate like that for 4 or 5 months like it did in 1972. So that's where we are. Now, for the more important charts with respect to the coming peak in silver and the gold-silver ratio. So typically what happens is, as I said, you get a burst at the end of the move. And not only do you get a burst in silver, but you really get a burst in the gold-silver ratio. So silver strongly outperforms. So I've highlighted here, or I've marked with vertical lines, some various peaks in the last 25 to 30 years or so. And what we have here is this is the Huey Gold Bugs Index. So that's an indicator for the sector. This is silver. This is daily data. Now, this is the gold-silver ratio, but this is silver divided by gold. This is the 50-day rate of change in silver, and this is the 100-day rate of change in silver. So if we look at some peaks here, this is 2020. Here's 98. Here's 04 and 06. Now, 2008, that was another peak, but that was interesting because silver lagged into that peak. Same thing happened in 1974, by the way. Silver peaked first. 2011, of course, was a massive peak. We can see the gold-silver ratio shooting up in favor of silver. But here we're looking at the 50-day rate of change and the 100-day rate of change in silver. Now, it's interesting. Look at where we are compared to these other peaks. This is 50 days right here. We're not even close to these levels. So this is the performance in silver over the last 50 days. This is a performance over the last 100 days. And again, we have a long way to go just to get to 2004, 2006. I mean, those are, I think, comparable points to right now because these were basically intermediate term peaks within a secular bull market. And so we can see what happened to the gold-silver ratio. Again, this is silver divided by gold. So you had a push up here like that in 04, and this was the 06 peak. And you saw the same thing in silver, move like that, move like that. And again, look at the 50-day and 100-day rate of changes, and you can see the levels that we got to. There's still a lot of room for silver to move right now. And yeah, silver's at 44, so that means there's room where it can probably trend up to 50 in the next few weeks before it starts to get really overbought compared to history. So that's really interesting. And here's the gold-silver ratio, or should I say silver divided by gold, because that's how it's showing on the chart. And look, we haven't seen any bit. We saw a little bit before, but in the last little while, we haven't seen silver really outperform that much, although we'll show it in the next slide. And so there is room where this can push higher like that. Okay, now finally, so this is gold divided by silver, and this is where we are. And so we're at 85 right now, and it has been coming down, but not, if you zoom in here, it hasn't been coming down that much in recent months, but the trend is still down, and it looks like we could be starting to break a little. And ultimately, if we get a mini blow-off move, if we think about 4,000 gold and $50 silver, that would be a target of 80. But this could potentially come all the way down to 75. And if you use 4,000 gold or 3,950 gold, that gets you to about $53 silver. So still a little bit of a ways for this to move, but look what happens at those other peaks. Let's go back to 2004. This was an intermediate term peak. Look how much this thing dived at the very end of the move. This is 2006. And again, these were intermediate term peaks, not like 2011 or COVID. So it's very possible this thing could come all the way down to 75. And again, 3,950 gold, 4,000 gold, 53. Maybe if the move goes a little higher and you get 4,100, maybe you get 55 gold or 56 or whatever. But this is what happens leading up to an imminent intermediate term peak or a more significant peak in the market. You get the gold-silver ratio diving in favor of silver, and you get silver surging higher. And so what has happened in recent days, that could be the start of that. So that's the bottom line. And I'm eager to see how things transpire over the coming days and weeks. Do think the markets and the price action is telling us that we could be setting up for a mini blow off in the sector where you get $50 silver or a little bit higher. Then at the same time, gold trends and reaches 4,000 or gets very close, or maybe goes a little bit higher than that. And the way you know you're at an interim or intermediate term peak is the action in the gold silver ratio and the action in silver. So that's Macro Mondays on a Tuesday. Hope you had a great weekend. Hope you have an even better week ahead. Leave a comment. Would love to hear from you. I appreciate your support of this channel and my work. And I'll talk to you guys again later this week.